Good morning, guys. Welcome to the Camp Financial Stock Market Update. So, today we're just going to kind of focus on some of the different earnings that are out there, and some of the, at least some of the stocks that I own, since obviously those are the ones I'm going to pay the most attention to. So, if you hear the lapping, that's my dog, and she's ridiculous. I think she's part camel. She can drink a whole bowl of water in about 10 seconds, I think. And she's only a 55-pound dog, so it's not like it's a big bull mastiff or something like that. Anyways, so let's take a look at some of the earnings yesterday. So one of the things that I noticed, I was traveling for work, and I noticed on my phone, on my portfolio, that Interdigital IDCC was down about 15% yesterday, after they released earnings in the morning. So really with that, they definitely missed estimates. $3.11. They had projected $3 and a penny, and they came out at $2.99. So yeah, they missed by, and they missed on the top line too. They missed on revenues. But you see a company that misses by 12 cents on $3, that's what, so it's about 1/24th, so you're saying roughly, we're talking 1/24th, 1/25th. They missed by 3 to 4%. The stock drops 15%. I actually read on a forum yesterday, this guy's like, why would the stock drop that much on that news that they missed by a couple pennies or 10 cents or 12 cents, whichever it may be, if you're basing it off of analyst estimates or their estimates. Well, it drops that much because, first of all, it's been a very high flying stock. I mean, the stock's up huge in a year. People are expecting it to continue greatness. I mean, it's just like any other company that has consistently put out huge numbers and produced well, and gone up and up and up, and continued to push their earnings estimates up and say, yeah, we're going to hit this number, and yeah, we're going to hit this number, and they keep hitting higher and higher numbers. Well, when they finally miss, people are going to panic and get out. I mean, it's just like anything else. I mean, if you look at Chipotle last year when they had the Ebola scare, or the not the Ebola, but the sickness stuff that was going on with their food, their contamination. It was going up and up and up, and then boom, the bottom fell out. And in the last year, after the big drop they had the other day with their earnings coming out, I mean, they've been almost cut in half. So it really shouldn't come as a surprise. It's really more based on future projections, and some other information to kind of back that up. Is like, okay, yesterday Conoco Phillips, it closed the day up 5.25%. But if you read the headline, Conoco Phillips revenue slides, they report a $1 billion loss in Q3, but they see strong momentum for 2017. Okay, that's two different headlines that I found on Conoco Phillips. What did the stock do yesterday? It was up 5.25% at the end of the day. People are less concerned about the current earnings than they are about the projections and what you expect the company to do in the coming future, right? I mean, current earnings definitely still have an impact. People definitely still want to see good current earnings, but the bigger deal is being able to see or project, okay, this is what we think it's going to do going forward. So we talked about Interdigital, we talked about Conoco Phillips. A couple other ones that I have that were big on earnings information yesterday. Psychomedics, PMD. Let me take a look at it. I guess I don't know that it's necessarily on earnings, but yeah, there it is. Okay. Posted $11.8 million revenue. Their shares have increased 94% in a year. Okay, so they post a profit, 49 cents, and I don't know yet, but I'm guessing that they probably indicated some continued expectations that they're going to continue to see their profits grow. So, like I said, the stock's up 16.5% yesterday. Also, another one that I've got in here, let's pull it up. SJW Corp up 14.4% yesterday. And it's kind of the same thing in the last year. I mean, we're talking about a company that's from, if you go back to January 1st, we're talking about a company that's trading around 29 bucks, and it's at 51 bucks a share right now. It's the San Jose Water Company. Net income of 92 cents a share. Post revenue of 112 million. You know, again, I haven't read the full report yet, but my guess is there's probably some positive outlook in their conference call. So that's another one to keep in mind. Excuse me. Then my third and final system that I used to invest had one stock that had a pretty good pop yesterday, and that was Unum Healthcare, up 3%. Let's see if theirs was based on earnings as well. Yep. Added transcript of Unum earnings conference call on the 27th of October. Earnings beat estimates, and they kept their view intact. So they posted 99 cents and beat the estimate of 95 cents. And like I said, they expect what they had already projected to continue to happen. So, you know, as long as you've got companies that are putting out good earnings, especially now in the type of market that we're in, earnings has become a lot more important again. I think you'll continue to see positive results in your portfolios. You know, if you look yesterday across the market, you know, Verizon up a couple points. I'm not sure who this other company. Oh, CenturyLink up almost 10%. Western Digital up 5.5%. The real estate investment trusts all got smacked down pretty hard yesterday. Dollar Tree down 3%. AutoZone, O'Reilly Auto Parts down 8.72. AutoZone was down 3.35. Biotechs performed well. Celgene, Alexion Pharmaceuticals. Again, Conoco Phillips, we've already talked about, but Murphy Oil, you know, for example, so Conoco Phillips up 5.25, Murphy Oil down 7.1%. So there's a lot to be said about understanding the total impact to each industry. And I don't necessarily know exactly why they would have been down like that. My guess is they probably missed on earnings and didn't put out, a positive expectation of where it's going to go from here. So let me take a look back. We'll go back. So actually yesterday the Dow ended up down 0.16%, NASDAQ down 0.65%, and the S&P 500 down 0.3%. So I think the markets as a whole, they've kind of found, we'll call it a holding pattern there. I mean, I think it was interesting that it dropped below 2140 on the S&P 500. That could be, I think it's kind of looking for its next leg down, probably that 2130, 2120 range. We'll see where it comes out at today, but I'm guessing we'll probably have another down day as a whole on the market. But as long as you own good companies that are, still growing, still improving, then, your prospects definitely still look good to be a stock market investor. So that's it for today, guys. Take care, and we will see you tomorrow.